instantly. What other people do eventually, bro, you will always win. You will always win. You can never lose. Money loves speed. The moment you have an idea, execute it right away. Execute it. I was broke at age 18, bro. I could not pay my rent. At age 21, I made my first million. At age 22, I bought a Mercedes Benz. That's how fast you can make it if you are disciplined and consistent and you have speed. Action. You always take action. Yeah. If you do.
So that is a comment from a guy. So let me go live, maybe we can get more people online. This is not financial advice, Najali. This is not financial advice. This is not financial advice. So for anyone who wants to join the stream, we shall wait and see those people who want to join the stream as we see. Those ones who want to join the stream. The link is on bio. The link is on bio. If you want to join the stream, the link is on bio. You just join through the link, then you go to the YouTube. I'm literally streaming it live on YouTube. Also, you can subscribe to the YouTube channel, then you can get all those feedback, those information from there. So anyone who wants to join, just click the link on bio, then you can access the YouTube. I think I'm already streaming it live for now. This is trading. If you have never heard about trading, this is forex trading. So the link is on bio. Join it, then link on bio. If you want to access, just link on bio. It's easy. Then I can explain to you. It's much easier. So join the link on bio. It's a YouTube channel. It's a YouTube channel where I do a breakdown on the market. I've started because TikTok somehow this information needs more explanation. So if you want to join, use the link on below. I see Masai has joined. So you can join through the link. Just join through the link, then you get to know about this. So far so good. Trump has literally been doing some things in and out, and I think for now we cannot complain. They haven't had a decision. Trump has not gotten an agreement between US and Iran through the war. So I think the market will also react over this incident, and we are waiting to see on Monday how the market will react over it. Majorly because Trump, since the disagreement between the vice president of US and the people who were sent to do the negotiation didn't reach an agreement, then there was a dispute. So we shall see how it goes back. We shall see how the market will react and see our opportunities from each point. So I've seen people joining. Kindly join if you want to access the live, the stream online. You click the link, subscribe, then you can be able to access more information as I give guidelines. So I see we have some people who have already joined. I think we have some people who have already joined. So you click the link, you subscribe, you get this information. So you go to the live stream. It's in live stream, it's in YouTube. Majorly I'm doing trading, I'm doing backtesting. It's a backtesting of the week, in which the week has been. So as we wait for the next week to start, because we are day traders, so we do day trading. So majorly you can see, if you have no information about trading, these are candlestick patterns. You can see these are candlestick patterns, and these candlestick patterns, they give us the overview at which the market is moving. Either the market is going up or the market is going down. So in this scenario, we make money when the market is going up, and we make money when the market is going down. So this is under the technical analysis. Under the technical analysis, you'll be able to learn majorly what happens when the market is moving up or the market is moving down. If you want to know more about it, just join the link, then you subscribe to the YouTube channel, then you can get all those information from there. So this is how you analyze the market. So the first stage, the first thing you need to understand is that the market moves either up or down. So like you can see, the market is moving down from this point. So the market either moves up or down. So that's the first two states. The other state is either the market does a consolidation. So if the market is doing a consolidation in that state, it means the market is moving in one direction. Like this, the market is moving in one direction. So as you can see from here, the market is moving in that one direction, and as you can see from here, the market is moving in an upward direction. Okay, so I'll use the arrows just to indicate so that it becomes clear for anyone listening. So from here, the market is moving in a downward direction. From here, the market is moving in an upward direction. So we call this market a bullish market, and we call this market a bearish market. If you want to join, just go to YouTube and go to the account, then subscribe and just go and see the videos. So this market, as it's moving upwards, the market is moving in an upward direction, downward direction. So we majorly take our positions in either the market is moving up or it's moving downwards. I hope anyone can understand. Those who haven't done trading will not be able to understand, so they have to start from the basics. So the second perspective, when you see the market is moving in a sideways direction, so it's moving in one direction. So the market is moving in one direction. This is a one direction. It means it's creating the same equal highs and equal lows. So it's in one direction. So when you see these accumulation, we don't take our positions. We don't take our positions. We remain calm as we wait. So the ideal scenario for this strategy is that you have to take your positions at the lowest point. If the market is going up, you have to take your positions from the lowest point. So let's go to an overview at which we're going to learn from information. So I'll go step by step as I illustrate. So the first step, as I said, the market is moving in an upward direction. So the market is going like this: up, going down, going up, going down, going up, going down, going up. So this market is moving in an uptrend. So the market is moving in an uptrend. So the market is moving in an upward direction. So when the market is moving in an upward direction, we take buy positions. When the market is moving in a downward direction, we take sell positions. So I'll majorly emphasize on buying now here. I'll emphasize on the market is moving in an upward direction. So how do we identify the market is moving in an upward direction? So we identify the market is moving in an upward direction by identifying the highs and the lows. The highs and the lows. So we have to identify the highs and the lows. So where are the highs and where are the lows? The first step. So this one is a low. That's a low. So that's a low. This one is a high. That one is a high. So the first step is the lowest point is the lowest area at which the market was. The highest point is the highest area at which the market pushed to that point in order to be bullish. Bullish means to go in an upward direction. So the market is either bullish or bearish. So it can go in an upward direction or go in a lower direction. That's the first step. So when it creates a high, it comes down. The market, since does not go in only one direction, the market goes in different directions majorly. So as the market is going in different directions, the first key things you need to understand is that when the market has created a high, it has to push down to a position that it's able to come take liquidity, then pushed up to that position. So we take our position when the market has already pulled down to our areas of interest. That's when we take our trades. So in this live, the video is also on YouTube. You can go there and see it. So the first basic thing that you need to understand here is that when the market is pulling down, is going downwards in this direction, going downwards, it means it's creating a high that is not lower than the low. Let me illustrate. Let me explain it further so that you can be able to understand if you can't get me. So the first step, the market is creating a point called a higher low. So this point this point is called the higher low. So the higher low means that this point is high than this low. You understand? It's higher than this low. But the key area is this, that it's higher above the low. So it means it's not lower than this low. So it's above the low. So you can be able to take your position since from here when you see those higher lows. But the higher lows must be literally in key central areas. It must be in key central areas. The key central areas are in demand zones, specifically for buy positions. It must be inside the demand area, and I'll give you an overview on how to identify the demand areas. So since the market has created that higher low, it pushes upwards to the upper position. The upper position literally indicates that the market is going to create a higher, that's a higher high, a higher than the previous high. It's higher, this one is high, it has gone upper than the previous high. So this previous high is low, but this high is higher. So we are doing technical analysis here. We're only doing technical analysis. From here we shall go through the fundamental analysis, but majorly we are focusing on the technical perspective. So this one is higher than the previous high, so it becomes a higher high position. Is higher, iko juu ya ingine. Let me try to explain Kiswahili so that even you can also get it. So it's higher than the previous high, so it's higher than that point. So this indication literally gives us a market structure. It gives us a market structure. What is the market structure? The market structure is bullish. How do we identify the market structure? So when it does something called a break of structure, it breaks the structure, like this point. It breaks the structure. It breaks that structure. When it breaks that structure, we call that a break of structure. That's called a break of structure. That's called a break of structure. What is a break of structure? A break of structure is a point at which the market breaks the high and creates a new high. So the market is it's breaking the high and creating a new high, which is above the previous high. Hope anyone can be able to get it. Hope you can understand it. So the market is, if you're understanding it, just show some love. Show some love in the live. If you're understanding it, show some love. Show some love in the live. Push the live. Show some love. If you're understanding, this is free for you. If you're understanding the information that I'm saying, just click the love button. Show some love in the live. So the market breaks that point. It breaks literally this point. So it breaks the high, creating a new high. So clearly the market indicates to us that it is a bullish market. So our entries, where our entries, we take our entries at the higher lows. So we take our entries at the higher lows. These are the areas at which we take our entries. We take our entries at the higher lows. So we take our entries at the higher lows. So we take our entries risking and targeting at a higher, at the next high. So the next high, which is the next high? If we are taking a bullish position. So we take our bullish position from there. We take our bullish position from there. Second strike. Let me try to increase the color for you to be able to see it clearly somehow. Let me increase the color so that it can be clear, so that you can see it clearly. So we take our positions from here. So our stop loss is we put it below the previous higher low. So we take our positions after the break of structure. When the market retests now to our point, which is a higher low, we take our entries from there, targeting the previous highs. So as you can see, so our first take profit, this is a risk ratio of reward to 1:3. It means if you are risking $100, that means we are able to get $300. If you are risking $1,000, it means you are able to get $3,000. You get it? So our risk reward, our risk reward. So the first state that I usually tell most of the people that I train when they are trading, the first state, your first take profit, should be that nearest high. That's your first take profit. Then the second take profit is the next high. The next high, that's your second take profit. So you have your first take profit and your first take profit, that is a risk to reward of 1:2. It means if you are risking $100, you are able to get $200 as profit. If you are risking $300, you are able to get $1,200 times 2 is through your risk. So it depends with the amount of risk you're putting. So majorly for anyone who is doing his trading, I'll advise for a beginner state, start with the lower risk so that you can be able to have more targets as compared to your drawdowns. So take the first key risks at the first stage, the first targets. After taking the first target, if the market shows you it's continuing to be bullish, if it creates a higher high, then pushes down to a low low, now push your stop loss to your entry point. Then you can hold your trade to the third area, which is a risk to reward of 1:5, which means if you're risking $100, it means you're getting 5 times the profit. So if you'll be risking $100, it means you'll be getting 5 times the profit from that. That's according to your risk management. So but the first key step that you need to understand is that you'll have to take your stop loss from here to your break even, just in case the market reverses. You won't be able to garner any loss in the market. Hope everyone is getting me. So if you're understanding, you can share, you can click the love button, you can show some love in the live. If you're on TikTok, show some love in the live. If you're on YouTube, show some love in the live. So those who are on YouTube are able to see it clearly. Also on TikTok, they are able to see it clearly. So the major perspective of trading is to either buy and sell to garner profit. That's the major perspective. That's the major aim of trading. So you'll be able to garner these profits in your trading journey as long as you have a good structure like this. So this is how you know how the market is in terms of bullish direction. So if the market is going to be, we are going to buy in the market, we must have the key essential areas at which we are going to enter our trade and exit our trade. So those are the key areas, and you don't need to have indicators, you don't need to have all these. You have to just master the skill. You have to master how the market behaves. You have to master how the market goes with the flow. You have to go with the flow. You have to wait, you have to be patient. So for us, you have to be patient for the market to come to your zone. You have to be patient for the market to come to your zone for you to take your entries. So I hope that is clear. So majorly you'll realize that trading itself is a profitable industry. as long as you first understand the technical aspect. And the technical aspect, when you understand the technical aspect, now you move to the fundamental aspect. And fundamental, it's all about Trump. When I started, I was saying about Trump and the war and Iran and gold and all these other assets. As they move, they literally give us an indication on the market. So since we are trading, we are FX guys, so we are trading majorly currency pairs, and we also trade gold. Majorly, the first indication that we need to understand in the market is that under these criteria, how does it happen in the market? How do you get these buy positions in the market? How do you get this structure in the market? So how do you get these structures in the market? So I'll go down and give you the structure, how you get it. Okay, so we are here. So the first step that we need to understand is to understand how is the market behaving? How is the market behaving? How is the market going? How is the market? Where is the market going? Is it bullish? Is it bearish? Is it going down? Is it going up? So as you can see from your naked eyes, as you can see from this market, the first step you can see before we start showing you the demand zone and demand areas, the first key thing you need to understand is that the market is moving in an upward direction. Like for this, I can say the market is moving in an upward direction. As you can see from here, from this down level, at the point at which it was consolidating, the market was moving in an upward direction. So the market is moving up. So where are we going to take our entries? Where are we going to take our entries? We're going to take our entries at the point at which the market goes back to our position, goes back to our entry, so that we can be able to take our trades. So for any demand zone, it must be in a higher time frame. So the higher time frames that the demand zone must be on is either on the daily, since we are day traders, either on the daily, either on the 4 hours, either on the 1 hour, either on the 30 minutes. That is the lowest, highest time frame you can be able to analyze your market. You should not go lower than 30 minutes. If you're going lower than 30 minutes in your analysis, it means you're going for your entry areas. You're going to your entry positions at which you're going to take your positions, you're going to take your trade, as compared for you when you are in a higher time frame. So you do your analysis in a higher time frames. So the first step that for any identification of a demand zone, how do we identify a demand zone? So for any demand zone, there need to be an accumulation state. So the market has to move in one direction. As you can see from here, the market is moving in one direction. From here, the market is moving in one direction. It's not creating higher highs, it's not creating lower lows, it's not creating, it's in a zigzag situation. You can't identify the point at which if it's bullish or if it's bearish. You can't identify if you're going to buy or you're going to sell. So that's the first state of identifying a demand zone. So since you have identified the market is in a consolidation state, the first key thing, we wait for the market. As you can see from this point, we wait for the market to push in an upward direction. So the market is pushing in an upward direction. So we wait for the market. Since after the accumulation phase, after the accumulation, you can see after the accumulation, the market is accumulating in this state. That's an accumulation phase. That is an accumulation. It's called an accumulation. The market is moving in one direction. After the accumulation phase, the market pushes to one direction. So the market pushes to one direction from this point to that point. So the market is pushing to one area. So the market pushes to one area. When it pushes to one area, we identify the break of structure. We identify the break of structure, the point at which the market is indicating that we are continuing to go up. And since we are continuing to go up, it means the market is going to be bullish. After that, after identifying that the market is going to be bullish, the second step, we wait for a pullback. So we identify the break of structure, then we look at where is your demand zone. So our demand zone is identified from these key areas. The first key area is that it needs to give us a fair value gap. So what is a fair value gap? A fair value gap is an area at which the market pushes in one direction, leaving some orders, so that the people who are trading, the banks, will come to those areas to be able to get those entries and push, buy at a cheaper price, sell it at a higher price. So the bank will wait, will push with some orders, pushing the price to one position. Then the market comes down, gives us a fair value gap. The market will go back to the fair value gap so that it can be able to accumulate those orders to be pushed in an upward direction. So we take our entries when the market is retesting back to those orders that were first put, so that it can go from that point to the other. So this is a fair value gap. How do you identify a fair? So the first state is this was a demand zone. So we draw our demand zone. As you can see, the market from this point, from this was a hammer. The market from this point, this area, this candlestick, the market from that point pushed, so giving us a demand zone from there. So to identify that it is a pure demand zone, it must give us a fair value gap. Where is the fair value gap? This is the fair value gap. The fair value gap is from that area to that area. And you can see the market pulled down to those orders. The market pulled down to those orders. After getting the orders accumulated, went down now to the demand area. So the market pushed down to the demand area in order to take all the orders, then went to the upper direction. So these are the positions at which we are going to take our trade. We take our positions from these areas. We take our position from these areas because the market, this was a fair value gap. This was a fair value gap. That is a fair value gap. So the market came back down to the fair value gap. Came down, pushed, came to the demand zone, then spiked up. So the market was pushing down. The market pushed down to that zone, came down to that area, came to a demand zone area, and was pushed up. Since this was a key area that there was a lot of buyers in that position, that was a demand area from that position. So anyone who has not understand, put in the chat box. Anyone who has not understand, just put in the chat box. If you have understand, show some love. If you don't, if you are late in the program, just click in the link, go to that YouTube channel, subscribe, go to the live area, you'll get the trade. You get the explanation of this trade. You get the explanation of this strategy. Now this is demand and supply. This is how you trade demand and supply. Very key knowledge you need to understand. Since after understanding this is the technical perspective of the strategy. This is the technical perspective of the strategy. After understanding now the technical perspective of the strategy, now you implement, you go to your trading view. You go to your trading view, you put in capital in your trade. If you don't have money, you can buy the proper prop farm accounts which they are going to give you capital for you to start as a trader. So there are many firms which are giving capital, and if you have no clue of these firms, I'll literally give you an overview. Some of these firms are like got funded. You can see got funded. Got funded is a good firm also. It gives you got funded gives you capital for you to start trading. As you can see, it is giving you capital from $5,000, $10,000, $15,000, $25,000, $150,000, $150,000. So it's giving you capital for you to start to trade if you don't have capital. So these are proper accounts that you are able to trade with. So you can go to Got Funded. Got Funded is able to give you majorly capital so for you to start your journey in trading. So I've given you the skill. That is the first basic skill you need to understand about trading. That's the first basic skill you need to understand about trading. The basic skill that you need to understand, that's the first basic skill. I know people sell to you courses and everything, it's okay, but this information is what they are going to give. There is no secret. This is the only secret. So you can go to Got Funded, get capital, start your trading journey slowly as you build up your capital. As you can see, they are giving rewards over their trading capital. So majorly, if you are a beginner and you have small capital, so the prop farm accounts, you buy the prop farm accounts. So you have to give money to an investor so that they can be able to give you capital, because they're investing in your skill. So the first key thing is they need to show that you're serious. You need to show that you're serious and you're given rules for you to be able to get it. So like let's use the 5k account. As you can see, the 5k account, the first thing you need to understand is you can go to the 2-step challenge. You can go use the 2-step. It means that you're able to be given 2 chances for you to show that you're profitable, you're not gambling. After getting the 2 channel, so the first thing you need to understand is that there is a maximum drawdown. So there is a maximum drawdown. So as you can see, the profit target, the first phase is 8%. Then the profit target for the second phase is 6%. So you get a 6%. The maximum drawdown, if you lose maximum that 4% of your account, you literally lose the account. Then the maximum loss of the account is 10%. So you're able to take your trades from those areas. It has a good leverage, which is 1:100. It has a good leverage 1:100, and the reward is bi-weekly. You're paid weekly. So the account of 5,000, it's only $17. It's only $17 for you to get a 5,000 account. Why not start trading? It's that cheap. It's that cheap for you to start your journey. So if you want to trade and make money, for the prop firms, you have to pass those challenges for you to get withdrawals. For you to be paid, you have to pass. For those ones who want to be able to start with a broker, text, my number is on bio, text me, I'll send you the broker for you to now start. The broker that I use, you can be able to start trading from 50 shillings, 50 Kenya shillings. That's the broker I use. So the broker I use, you can be able to start trading from 50 shillings. If you literally have the skill, I've already shown you the skill, you can start trading from 50 shillings, 50 Kenya shillings. Is that serious? Is that serious? So let's go back to the charts. So that's one key area. If you don't have capital that you want to start big. Yes, you want to start big, go for the prop firms. If you want to scale up your capital, you can use the broker, then scale up your capital. Then after you have reached that maximum amount at which you're profitable, deposit to your broker and continue now trading. All this information I'm giving you for love. Just show me some love over this. Show me some love over this. Give me love over this. Give me love. Today is a Sunday and I have to provide you with good information. I have to give you value for your data. I have to give you value. I have to give you value for your data. That the next time you're going on TikTok, you'll go live and be able to give people interactive content, information that they are able to improve their lives, improve their financial state, get a good life, get a good living, improve the way they are. That's part of life, that's society. Because we never know at the point at which we are able to meet each other. They say mountains never meet, but people meet. That's why you have the social media. So for me, I give valuable information. I give you feedback. I give you information that is able to improve your basic life. So this is one of the skills that this is forex trading. It's one of the basic skills that you as a Kenyan, you are here in Kenya, you can be able to earn an income. You can do it as a business. Most of us, we are doing it. It's a business for us. We don't go to work. We literally sit here, put on our computers, start making money over here, because the market moves all the time. The market moves all the time. So people have to use money, so we have to make money with money, and there is no way you can make money without money. You have to use money to put in your fuel. You have to use money to put in your car. You have to use money to buy your goods. You have to use money to buy your food. You have to use money to buy something that is going to give you energy. So in trading, we are using money to make more money. That's it. That's the plain truth about this industry. You have to use money to make money. You have to use money. If you have the strategy, if you have everything, you have to use money to make money. So the key thing is now the patience. So how am I going to teach you the patience? So the patience works on this point, that the first key thing, you need to understand your risk. How much money are you willing to risk? How much money are you willing to lose at this point for you to get more? If you're willing to risk your 50 bob, there is, I've said text me on WhatsApp. I'll send you the broker. My number is on bio. I'll send you the broker. Text me on WhatsApp. I send you the broker. You start your trading journey. Because for us we have to be aggressive in this industry. We have to think outside the box. We have to think outside the box. If you are employed, if you're literally employed, if you are employed, you have to think outside the box for you to get out from the matrix, because this is a game played by the matrix. Your money which is being saved is under inflation, so your money is devaluing. Your money is devaluing. If you're not making money with your money, it means you're losing value of your money. So I'm going more in finance for you to understand now the psychology around it. So if you're not literally using your money to make more money, if you're not investing your money, if you're not putting your money in places where you're getting more returns for your risk, you're undergoing something called a deflation. Now, when the inflation comes, inflation is there, inflation is in the financial system. It works in, day out. So that's how we have the foreign exchange system. So the banks regulate each time, these wars and calamities will be here. And the reason why they are here is because there is a push of the economy. The economy has to generate more. But the problem is that the money is not coming to you because it's being saved in other reserves. So you need to have a strategy at a point at which you're not going to steal the money, but you're going to get the money from those people in a knowledgeable way, using your brain, using your skill, using how you understand the market. That's the only way you're going to get this amount from these people, because they have to create companies, they have to create these amenities for the market to be able to grow. If you haven't followed me on TikTok, follow me on TikTok. I'll be giving you all these breakdowns each day, each out. Every weekend is a backtesting day for you guys, for you to understand this knowledge, for you to grasp this and be able to activate and be able to be profitable traders. So majorly today I've focused on the demand area, and if I can give you examples, I can give you examples of many other currencies that are in place, and you'll see. So let's start. That was Euro USD. Let's go to GBP USD. Let's go to GBP USD. As you can see from GBP USD, the first thing is this: the market accumulated. After accumulation, the market pulled down. Create a break of structure from that point. After creating a break of structure, let me draw the break of structure. That's the break of structure. Oh, that was the break of structure. After the market creating a break of structure, it pushed to one point. So the GBP was profitable. As you can see, it tapped into our demand zone and went up. That's how this works. If we can go to another currency also, we can go to the next currency, we see how the strategy works. As from here, this is USD JPY. As you can see, the market came. This was our break of structure. The market came to our demand zone. After coming to our demand zone, creating a fair value gap, pushed to the upward. So you can see USD JPY was profitable. So USD JPY was profitable. Let's go to another currency. Let's go to the next currency. You can see how the strategy works. As you can see, this one, the market came to a demand area, pushed up. This is Australian dollar against US dollar. This is the Australian dollar against the US dollar. The strategy works. Let's go to the next. The issue is all about patience. This is New Zealand dollar against US dollar. So the market pushed, created a break of structure, accumulated, created a base, pushed, created a break of structure, pulled back to our zone. The market pushed up. That's NZD, New Zealand US dollar. Let's go to the next pair. Let's go US CAD. Let's go to the next pair. As you can see, this was a break of structure from that point. So from the explanation that I gave you from the first state, you need to understand is this: there is demand and there is supply. The supply is where at the point at which the market reacts from the upper side, and you are able to take your entries from those sell position to the downwards. So you're going to make profit while you are selling. So you're going to make profit while you're selling. Those who have come late in the live, you can go to the YouTube channel. It's in the link in on bio. Just going there, go to the live section. You'll be able to start this video from the beginning to the finish end. So as you can see from this point, the market came up to our supply area. Then we took our position of sell from there. So I'll illustrate majorly on sell position. Let me start from sell position. Let me explain about sell position. So for sell position, the market is moving in a downwards direction. So the market is moving in a downwards direction. So the market is moving in a downwards direction. For you to take sell position, the market must move in a downwards direction. So when the market is moving in a downwards direction, the first key thing is creating a high. It's from the highest point. The highest, this is the high. It creates a high. That's a high. So the market is coming from point which is high. Then it creates a low. The market comes down and creates a low. That's a low. So when the market creates a low from that point, it creates a lower high, which is lower than the previous high. It's first lower than the previous high. This one is low. This is a lower high. So the market is creating a lower high. That's the lower than the previous high. You understand? So from that point, the market now breaks that low, creating a break of structure from that point. It breaks the low. It breaks that low. Creating a break of structure. It breaks that low. After breaking the low, it creates a lower low, which is lower than the previous low. This one is a lower low. That's a lower than the previous low. It's lower than the previous. This is the low, but this one is lower than the previous low. This one is lower than the previous low. So from that previous low, we know where we take our entries. We take our entries after a retest, after the market has moved back. So majorly for sell positions, we take our entries from low highs. So we take our positions from lower highs. From our entry point, we take our position from lower highs. Majorly, we take the positions that we are taking from the lower highs. We take sell positions from here. After the break of structure, after the break of structure, we take our lower highs. So the market, this is the point of which we are taking our lower highs. So we target the lower lows when downwards. So we target downwards. So as you can see from this point, so we're taking our sell position from here, taking our sell positions from there, putting our stop loss on the lower high, having our target profit on the lower lows. As you can see from that, that was a 1 is approximate to 2. As you can see, we can take our trades from that point to that. So we take our trades going downwards now from that point. So this is for a sell position, and I'll give you the example in the market. Let me go to the market now, give you an overview. This is for a sell position. So as you can see from this point, this is now the sell positions. This is how we took this sell position. How do we take this sell position? The first thing, the market accumulated, then pushed. Understand? So it created our first demand area from that point, then pushed down, created our second demand area from that point. But the market had not created a break of structure. This was an inner break of structure. This was an inner break of structure. So we assume the first inner break of structure and take the next break of structure, which is an outer break of structure. So from that point, we identify our demand area. We identify the supply area now. Not we are selling, we identify the supply area. So this is the supply area. So we look at the green candle. At the green candle, this one is the blue. I changed mine to blue. So we take our supply zone from that point going downwards. So the first key area, we wait for the market to come back to our zones. Wait for the market to come back to our area of demand. Area of supply, area of supply. Wait for the market to come to our area of supply. So we take our entries from the areas of supply. We take our entries from the areas of supply. So the market first did this. The market did this. So the market first accumulated. After accumulation, it pushed. Since it pushed, it created an inner demand, but we didn't take the inner demand. This was the accumulation. The first state, for those who can see on TikTok can also be able to see. So the first state, the market accumulated. After the accumulation state, the market pushed down. So we take from the outer break of structure for this. For this, we decided to take because we since saw the market wasn't pulling back to that position. So the market came to that point. So from that point, as you can see from that point, the market literally broke from the demand, pushed upwards. That's a push. That's the first push. Then it started pulling back. Started pulling back to our area. So it reached our demand zone area. So the market reached our demand zone area. After the market reaching our demand zone area, the market pushed outside the demand zone. So we take our entries from there, taking our stop loss from outside. So when the market just detected inside the demand zone area, we take our entries from those demand areas, from those supply areas, and we push. We take our market back profits. That's a risk ratio of 1:5. If you are risking $100, 100 times 5, that is $500. If you are risking 10,000, you are able to get 60,000. If you are risking $1,000, you are able to get $5,000. So that's how the power of trading works. That's how power of trading. If you literally understand, so we had reached to US card. This was US card. For US card, it was a sell position. All those other currency pairs was a buy position. So we go to USD CHF. USD CHF was also a sell position. There were two positions. So for the USD CHF, there was a bullish position and there was a bearish position. So majorly we took the bearish position for USD CHF, targeting our demand zone, our previous demand zone. So as you can see from this point, there was this break of structure. The market pushed, accumulated, create a break of structure, waited for the entry, take our entry, come down to the demand zone area, took our entry, push down to a sell position. Now we go to the last pair under the forex, major forex pairs. This was GBP USD. So as you can see, the market pushed down to a zone, came down to the demand area. This was a buy position. So this is how you do your analysis on trading. As a day trader, this is how you do your analysis on trading. For this week, we are going to see how the market is going to behave majorly. We are going to see how the market is going to behave accordingly, and we shall take trades accordingly to how the market literally behaves. So that's how the market behaved over that period. For me, I'll go to the other part where I'm going to give you an overview. I'm going to give you an overview on how now I've explained the demand. I'm going to go now to the fundamental for the technical aspect. We are going to the technical area at which you're going to understand in terms of the technical aspect for you to be able to gain trading. I've been able to learn this information for the longest time, and I trained myself for this information for the longest time, and it has been helpful. It has been helpful for me. I can't complain. That's why I'm giving you this information. So majorly this information is for free for you guys. The YouTube channel is on link on bio. Just click on the link and be able to join the link and be able to see this information. So I'll go to the second area where we're going to do risk management. So how do we do risk management? This is how we do risk management. So you're going to go to your Chrome browser. You're going to go to your Chrome browser. This is how you do risk management. For those who wanted to know how you do risk management, how people flip their accounts, and by using risk management with their strategy, this is how you do risk management. So how do you do your risk management? This is how you do it. So you have to search baby. You research for baby. You'll have someone is reporting my account. Why is someone reporting my account? Really? I'm giving you information and someone is reporting my account. Like, what's the reason why I'm giving you information and you're reporting my account? You guys can't be helped, can you? Those who are reporting my account, kindly don't do that. I want to help people who want to trade. So please, if you think this information is not good for you, kindly just leave it. Leave the live. If you think this information is beneficial for you, then join the live and continue. Be pushing and sharing the live. Just share the live so that at least we can have a lot of people who can be able to gain this information, because it's free. This information is here, it's free. You understand? This information is here, it's free. I'm giving you this information just to help you. But if you're reporting the account for other people not to be able to be helped, then why are you buying your data? Why are you buying your bundles? You're buying your bundles to benefit, to have good information that can benefit you. So please, don't do such things. Me, my TikTok account, I don't benefit from it. I just benefit by helping people in the community, helping people gain knowledge. That's my agenda. I don't require your money. I haven't asked anyone to pay me. I want to help you guys for free, for you to understand demand and supply. So that's it. We want to help you. So majorly for you to understand risk management. Risk management is a point at which you are able to understand how much money am I going to risk in order to be able to be successful. So the first step you need to understand, you go to your Chrome browser, then after going to your Chrome browser, you look for Baby Pips lot size calculator. So Baby Pips is a website where you are able first to learn trading online for free. Do you understand? You're able to learn trading online for free. It's information that is free for you guys. All of you, many people are disclosing this information for you not to understand. So majorly for you to understand this, when you go to Baby Pips lot size calculator, you are able to go there and be able to go in and be able to do your risk management. Let's go in to the Baby Pips lot size calculator. So when you go to Baby Pips lot size calculator, as you can see from the top, position size calculator. So that's the main agenda and the point at which we are going to start our risk management. So our risk management journey starts from this point area at which you are going to do our risk assessment from there. So how do we do our risk assessment? The first step, we open the link. After opening the link, the first thing it gives us, it's a calculator. So before you open your trades, as you are waiting for after you have indicated your demand zones and your supply zones, as you are waiting for the market to react, kindly go to the Baby Pips lot size calculator and calculate the amount of risk you're going to risk. Amount of risk you're going to risk at the market for you to be profitable, and the amount of money you're going to lose in the market for you to be profitable. This is where now you identify now the lot size. You go to MP5 and put the lot size. This is where you get now the lot size. So under the lot size, majorly the lot size is indicated where you're going to go to the market. After going to the market, you're going to indicate the amount at which you want to risk. Let's do it mathematically. So it will calculate for us. We don't have to calculate ourselves. It will calculate for us. Let's assume many of you have deposited some money in their account. So let's say you have deposited $100. That's $100. So how much money how much percentage are you going to risk in the $100? That's the key thing that you need to ask yourself. It's a psychology perspective. This is where we now go to the psychology perspective for you to understand now the trading mathematically, because it is a probability aspect. It is about probability. It's about probability. Either I win or I lose. But if I'm losing, am I losing more than I'm winning? But I'm winning more than I'm losing. It's a probability mindset, and this is where we deal with now the probability. So in all the capital that I've invested in my account, that's the first step. So I've invested my trading account with $100. That is 12,000 Kenya shillings. That's 12,000 Kenya shillings. 12,900 Kenya shillings. That is the amount of money I've invested in my trading account. I've said there are trading accounts which you can start as low as, you can deposit as low as 50 bob. It's there. I've said if you want it, just inbox me on WhatsApp. The link is on bio. So we come now to this psychological perspective. How do we now take the initiative for us to do our risk management? How do we do our risk management? So since we have already invested $100, we go now to the risk. So for the risk, the first step you need to do is this. You have to understand, the first step is you have to understand that for your risk management, you have to understand you need to risk only 1 to 2%, 1 to 3% of your capital. You need not to risk more than 3% of your capital. If you risk more than 3% of your capital, you are over risking. Now, when you are risking more than 3%, it means you are starting now, you are like flipping. That's flipping is the ability of you to risk more than, but the industry gives you that ability to risk more. But for someone who is scaling his capital, for someone who is growing his account, for you to get good returns, kindly risk to 1:3. 1%, 2% of your capital, or 3% of your capital. Only those. Risk 1% of your capital, 2% of your capital, or 3% of your capital. So I'll go to the 1%. If you're going to risk 1% of your capital, having a stop loss of 20, the maximum stop loss I'll prefer is approximately 20. Using a stop loss of 20 for the Euro USD, it means for every trade for one trade that you're going to take, you're going to risk $1. It means you lose $1. If your stop loss is hit at 20, if your stop loss is hit, it means you lose only $1. It means in $100 you'll remain with only $99 for you to trade if the market goes against you. You'll be risking only $1. Only $1 in $100 account. So you are able to take your positions by risking for putting $100 into your account. You'll be risking only $1. That is 129 Kenya shillings for you to get more than 129 Kenya shillings. So if you go to the calculation, for the Euro USD, for this trade, if you had taken this buy position for this trade, and you had risked your 1%, let's calculate, let's see. That is a 58.7%. That's a 58.7%. So the question that will align will be that's a 58, that will be 58 times 0.01. That's 58 times that times 10. That's approximate. You'll be getting a risk to reward. You'll be getting almost like $10, $20 to $30 in that trade. But you'll be only risking $1 in your account. So this process of doing your risk management is a very key area. So if you're going to increase your risk to 2%, increase your risk to 2%, it means approximately you'll be almost the same in that area, but you'll be approximately at a higher profit margin. If you're going to be taking 3%, if you're going to risk 3% of your capital, you'll be risking only $3 there in a $100 US account. So you have $97 remaining as capital in your account if you lose the trade. If the trade goes against you, it means you will still be having more capital for you to continue trading. Now you can go to if you now are an advanced trader, if you now master the skill, if you know your good entries, if you know your probability trades, if you know the trades that are clear that you're going to make profit, you can risk more. And when you risk more, you can risk also 5% of your account. Some risk 5%. So you'll be risking $5. So it means for every trade you only risk $5. It means you remain with capital of $95 in your account. Some will risk 20% on their account. So those who are risking 20% will be risking only $20 of their account. That's more risk, and with more risk comes more reward. With more risk comes more reward. So for the 20%, it means for a push, it means you can for if you go to a risk reward of 1:5 is 5 times your risk. So it will be making more. So you with one trade you can be able to make $100 over it. You can be able to make $300 over it. You can be able to make $500 with using the $100 account by having this good risk strategy. So you will be able to make $500 with your $100 account with this good risk strategy. As long as your strategy is right, as long as you have mastered your strategy, then you're good to go. So that's the main goal of this. That's the main goal of this is now the risk management. It takes approximately, for technical analysis, it takes approximately 40. It's 60. For psychology, it takes approximately 40%. Then the technical perspective takes 30. So this the psychology perspective takes 60%. This is the 60% that you have to be doing daily. The 30% is the technical aspect, the technical analysis that I've already shown you. That's the 30%. Then we have the 10% is the fundamentals. So this is the 60% that is more important for you in your trading journey. It's very, very important for you in your trading journey. So show some love in the live. Show some love. I'm giving you this information for free. If you didn't get this information, you'll go to the YouTube channel, which is in the link below, in my bio. Go to the link, then go to the YouTube channel. I've already posted it, the video. You can go over it and be able to see it again and be able to do your back testing, do how the strategy is, take your trades from there. So the 60% is the psychology, the 30% is the technical. This is the 30%. This is the 30% of it. This is only the 30%. Now the 10% is the fundamental analysis. The 10% is the fundamental analysis. And where do we get the fundamental analysis? There are two websites in which you get the fundamental analysis. The fundamental analysis, we can get it from Forex Factory. You come to your Chrome browser. Just come to your Chrome browser. When you're here, come to your Chrome browser and search. If you're writing down, come to your Chrome browser and search for Forex Factory. Search for Forex Factory. This is a website. So this is the website. We are now in another area we were talking about. In another area now. We are in the fundamentals. So I'm going to take you over the three basic areas for you to start your trading. The three areas, three basic areas. So we go now to the fundamental analysis. So the fundamental analysis, we can get it from forexfactory.com. We can get it from investing.com. So here on the Forex Factory, what do? We open the link. It's free. These websites are free. You don't pay, you don't do anything. They are free. You don't. So as you can see, please, if you want, if you are, some people, I don't think that what they're doing. Like, why do you want this live to be banned? I'm helping these people. Why? Are you jealous because I'm giving people information for free or what? Why are you jealous, man? People have to make money. Why do you don't want people to make money? You are jealous. I'm giving this information. They have already been restricted twice. Why are you doing this? This information is not going to harm anyone. This information is content that is going to help you be able to generate an income for your own self. Why do you want my life to be banned? Why? As Kenyans, we need to have like good hearts. If you're getting information that you're not paying, it's for free, it's improving your life, kindly try, have the good heart to be able to also give back. Just appreciate. You don't lose anything. Today is a Sunday. We have to pray for God to forgive us the sins that we have done. We have to pray for God to help us. But if you have given the heart to be able to improve, change the life of someone else, give someone knowledge, it's more important for me. For me, that's what I see life. That's why I'm not bitter about it. That's why I see life. So this is the Forex Factory. So under the Forex Factory, in trading, you come here. In trading, the market moves in 4 sessions. So there is the Sydney session, there is the Tokyo session, there is the London session, and there is the New York session. So since we are in Kenya and we want to make money, so we have to ask for which time zone is the market having a lot of volume. So we trade at the point at which the market is having a lot of volume. So why is the market having a lot of volume? The market is having a lot of volume either in the London or the New York. So the question is, we can trade the Tokyo, we can trade the Sydney, but most of that time some of us are already asleep. So some of us, we can be sleeping since we are in Kenya, so we can be sleeping. So imagine saa 7 ya usiku at 1 a.m. in the night, you'll be sleeping. So at 3 a.m. in the night, you'll already be sleeping. At 5 a.m. maybe you're starting to wake up over the day. So the Tokyo session, the Sydney session will start at 1 a.m. at night. That is 12, at 12, almost 12 to 1 a.m. at night. Then it moves now. Someone is literally why is someone wants to suspend the live? Why are you doing this? Why are you doing this? Why do you want the live to be suspended? I'm helping those guys. Show some love so that these guys can get out of the denim. Show some love in the live. Show some love so that these guys can't suspend the account. Show some love so that you can still continue giving this information. Show show some love over it. You know, we always have in society, we always have these people. It's normal. It's normal. It's normal to have people who have weave. It's normal. It's normal for them. It's normal. So show some love, show some love, show some love. Thank you so much. So since the market is at 3 a.m, we don't trade at that time since we are asleep. So at 5 a.m, maybe you're already starting to wake up. So you can start doing your analysis from 5 as you wait for the London and the New York session to open. The London session opens at 10 a.m. Saine, 10 a.m. in the morning. For anyone who is in Kenya, at 10 a.m. when you have already opened, when you have already 10 a.m. when you're already awake, the stock market in London is opening. So opportunities for making money is at the table. So at 10 a.m, as you can see, at 10 a.m, 12, 1, up to 3 p.m, at this Asaba, you have the opportunity to be able to make an income. So then when London session has already opened, we wait for the New York session. The New York session starts at 3 p.m. So the New York session will start at 3 p.m. in the evening. Satisa. So at New York, at 3 p.m, New York session will start. So when the New York session starts, it means we are ready to make money in the London, in the New York session. So we are going to the fundamental. This is the fundamental analysis. So you need to understand the sessions, the time zones at which you are. Which time zone is beneficial for me to trade which currency pairs? So which currency pairs are dominant at which time zone? So I can see Maureen is so concentrating, he's very serious with this information, and I see his benefit. So these are the time zones at which we are able to get into the market, take positions, make profit. From all this information that I have given according to the time zone, now we come to here on top. Let me try. So we come at this area in the top. We come at this area in the top here. As you can see from here, there is the forums, there is the trades, there is the news, there is the calendar, markets, and then brokers. So majorly here we focus on the news. We focus on the news here. We focus on the news. We see what news. So the basic news that we focus is the high impact news. As you can see from here, US Vice President Vance announces no agreement reached yet. So this information is a red folder. It means for US stocks, it will be having a problem for them. So the confidence around investors that Trump was the one who is able to reach an agreement within this war, then this indicates that he is not able to reach this agreement with these people in this war. So these are the news that are important. We don't focus on news that, oh, Gachagua has done this, Gachagua has done that, Ruto has done this, Ruto has done that. We focus on what is giving us money. Show some love. Watu wa 2 term na 1 term, show some love. Show some love for people of 2 term and 1 term. Show some love. So for here, for forex trader, we don't think about 2 term or 1 term. That's none of our business. We are not getting any value from it. We have to look for a position where we are getting values. We are getting values from United States. These currencies, these areas where economy is high. So watu wa 2 term na 1 term, kujeni na feelings zenu hapa. Here we don't care about your feelings. Watu wa 2 term na 1 term, kuja. People have 2 term and 1 term, come here. So we don't negotiate around your feelings in terms of what's happening in Kenya, what the government is doing. If the government increases the prices of things, for us it's all about affording it because we have the skill. So this is now the fundamental analysis. So fundamentally, we are looking at those currency pairs, how they are behaving, how the economies are doing. So as you can see for this, this news will impact the market over the week. So deposit your money in your broker, start trading. There will be a good, this is bad news. This is bad news. This is literally bad information that to the US, that they have not been able to reach an agreement with the Iran people. So the market will react over this information that you have already in place using the fundamentals. So I'm taking you through over the full course. These are full course. These are full course on trading. It's a full package. These are full information on trading. I'm giving you this full information, this full package, so that no one is able to complain. No one is. If you are not able to get the information, you go to the YouTube channel, you will get the information. I'm giving you this a full course on demand and supply, and what to look at and what to see. So since we had this information, so these are the news that happened. As you can see, these are the news that happened. So we look at the major news. We read the major news. We identify these major news that impact the market. So for a summary now on what we have been seeing, online traders saying, oh, CPI, oh, this information is going, we are trading news and all that. Come now to the calendar. This is the calendar. Under the calendar, we come to the calendar. So there are two things, the news and the calendar. So for the calendar, we shall use this calendar. So this is the calendar. This is the calendar. Under the calendar, this information is what you're going to get. So we'll move down to this position so that I can explain before we go to the calendar fully. So that is the information I want to explain over the calendar. So under the calendar, we have this. We have the high impact news, we have the medium impact news, we have the low impact news, we have non-economics, related stories, FF alerts, results. So for here, we only focus for the high impact news. The high impact news is given by a red folder. The medium impact news is given by an orange folder, and the low impact news is given by a yellow folder. Hope you can understand. So anyone who is live, continue pushing the live, shall give some love. So we focus majorly on this. So coming to the next area, I hope everyone has gotten that. So everyone asks, how does the market now move? The market moves by the central banks. The central banks are the ones which generate value in the market. We trade with the banks. So we trade with the banks. We have already mastered the strategy at which the bank is buying and selling currencies. So we come here to the fundamentals and look at what is happening in terms of the news. So when you can see from here, these are current central banks rates. Like in Kenya, we have the CBK, Central Bank of Kenya. So in the Australia, they have their own central bank, which impacts the market. For Kenyan central bank, it does not impact the market fully. So we have the GBP, Great British Pound, which also has its own central bank, and this is the rating at which its currency is at that point. So these ratings are the ones which are announced by the central banks at every point when there is demand and there is supply of currencies in the market. So hope you can understand this. So I think that is clear. This is clear. This is clear for all those who are live. This is very, very clear. Now let's come to the folders now. So as you can see from this point, these are information. Let's look for the Friday. Okay, let's look for let's look at the data for the last week. This is the data for the last week. So since Monday was Easter. Monday was Easter. So that was a bank holiday. So the brown folders indicate that it was a holiday. So when there is a holiday, the market is closed. So the market is closed when there is a holiday that affects the whole world. When the whole world has one holiday that is affecting everyone in the world, the market is closed. So it is indicated by these gray folders. So like on Monday, it was an Easter. So all these currencies had a holiday except the US. So the US had a red folder. This is the red folder. So the red folder was a PPI. So the PPI is a high impact avenue in the market that can either push the market to go up or down at a high rate. So from this data, this is the data I want to show you. So there is this data. So for the PMI data, there is this data. This is the 54. So majorly, let me put it here for you to see clearly, for everyone to see it clearly. So as you can see, this data is for the PMI. This is the PMI data. Is under the red folder. So this is how you analyze now. This is how you analyze high impact news. How do you analyze high impact news? This is how you analyze. This is the previous data, this is the forecast data, this is the actual data. So for this data, the first key important thing you need to understand is what is the currency, the PMI, what is the PMI affecting? The PMI is affecting the US dollar. It means the US dollar must be a base currency, must be the first currency for your pair between, if it's like the base currency, let's say for USD JPY. USD is the base currency, JPY is the quote currency. For Euro USD is the quote currency, it's not the base, because USD is not starting the pair. So for any currency which has USD as a pair, as a base currency, why did we take a sell position on USD JPY? And I'll give you the view. I'll give you the view. The USD JPY, where is it? USD JPY. No. It was not USD JPY. It was, let's see, yeah. Why did we take this sell position? We took this sell position majorly because if I can go back to our area, so that you can be able to understand it clearly. Let's see. So the previous data was 56.1. That means that data was high. This data was high. So the forecast data, they predicted that the PMI data will go down. It means the US dollar value will decrease. They predicted that US dollar value will increase. So at the time of the release of the data, the actual data which was released was 54.0. It was lower even than the forecast data. So that's how the market was pushed down by the PMI data. So the best thing that I usually tell people in their trading, the first thing, key thing, you don't have to trade news. You don't have to trade news. The only thing you can do is this. When you wake up in the morning, when you're doing your analysis on trading, just come to Forex Factory and identify which currencies are being affected by news within that week and which day. Then write them down. Then if those areas have no entry of the market, if they have entry in the market, wait for the impact news, the impact data to be released. Then take your trade from there. Do not trade when there is a high impact news. Trade after the impact news. Don't trade before the impact news. Trade after the impact news. And if you're trading before the impact news, kindly, when you are profitable, close your profits and wait for the market after the impact news. That's how you become disciplined. That's where discipline comes in trading. That's when you hear people say discipline. This is where discipline comes in trading. So as you can see, so on Thursday there was a PCE price index, high impact news. GDP index was an impact news. On Friday there were high impact news on Friday. That was the economical change. The data remained the same. Then we had the CPI news. So the CPI news, consumer price index. This measures how consumers in the market. The consumer price index was for Canadian dollar. So it was, the bank was measuring how the consumers are buying and selling things. So there also saw a consumer price index on the CPI on US dollar. So these are major news impacts that you have to understand. So this last website is investing.com. This is the last website. This is the last website I'm going to give you, is the investing.com. This is the last website. People have been asking so much about this. These are free. This is the last website I'm going to talk about. So it's the same. It gives us news. It gives us technical breakdown. So I'll start for the technical breakdown. We come to the technical area. You come to the technical area. So we come to the technical area. This is the area at which everyone was asking, hey, why? Show us. Everyone was asking, show us. Everyone was asking. This is the technical area. So under the technical area, the first thing you need to understand is the technical summary. So it's giving us a technical summary on how the market is according to different time frames. So majorly I always tell my people is that if the technical summary, if the higher time frames are giving you a technical summary of one direction, kindly, it means that the trend is literally on that one direction. You take positions on that trend. So this is where you get all this information. This is under the technical aspect. So when you come to news, you can get all the news. You can get all the news from here. As you can see, the same information, the US-Iran talks. So we can see, you can see all these informations. So I want to say this. I'll be giving you all this information. If you want the broker that I'm using, if you want to know the broker that I'm using, so that next week on Monday you can start your trading journey, kindly inbox me. I'm ending the live from here, so you can give me more love as I'm giving you this information as I go take lunch, So anyone who wants the broker that I'm using, kindly inbox me. My number is on the bio. Just inbox me. I send you the link of the broker that I'm using. It's a very good broker. When you withdraw your money, the minimum withdrawal is also 50 shillings. The minimum deposit is 50 shillings. So you can start your trading journey from there. As long as you have your laptop, either you have your laptop or phone and you have internet, you're good to go. You're good to earn a living. You're good to start making an income for yourself. So the link is in bio. Just take that number, text me, don't call. I have a lot of people who usually call me. Just text me on WhatsApp. I send you the broker that I'm using so that you can start your trading journey. So go to my bio, then take the link, take the phone number, then text me on WhatsApp. So for those who missed all this information, I've posted on the YouTube channel. This is in the link also. Go to the YouTube, do a recap of all that.